Namaskaram, మన Sakshi News కి స్వాగతం and welcome to our show Fun Factor. And today we have our guest Hari B. Gadi, who is MSEA IRS enrolled agent, MBA Finance, SAP 5CO certified, and MLO mortgage loan originator, Virginia, not a public in Virginia. Basically, who has like 5 years experience in IBM, KPMG, Accenture, J&J, and lot more. He is none other than one of founder of omsai.com LLC, one-stop business solutions for any of your tax needs. So, Namaste Hari Gadi garu. Welcome to our show.
Yeah, thank you, Radhika garu.
Yeah, ఎలా ఉన్నారు?
I'm going good, thank you.
Yeah. సో చూస్తున్నారు కదండి, మీకు ఏమైనా ట్యాక్స్ రిలేటెడ్ క్వశ్చన్స్ ఏమైనా ఉన్నా కూడా యూ కెన్ ప్లీజ్ డయల్ ఇన్ టు ద గివెన్ నెంబర్స్ అండ్ యూ కెన్ గెట్ క్వశ్చన్స్ ఆన్సర్స్ ఫర్ ఆల్ యువర్ క్వశ్చన్స్. సో హరి గారు చెప్పండి, మీ బిజినెస్ గురించి వన్ స్టాప్ సొల్యూషన్ ఫర్ ఆల్ బిజినెస్ నీడ్స్, అంటే లైక్ ట్యాక్సెస్ గురించి కానీ మార్టిగేజెస్ గురించి కానీ. ఐ థింక్ యూ హ్యావ్ లాట్ మెనీ ఇన్ యువర్ ప్లేట్, లైక్ కాంప్రహెన్సివ్ ట్యాక్స్ ప్లానింగ్, మార్టిగేజెస్, like we can talk about retirement LLC and like payrolls, bookkeeping, finance. So a lot of topics are there to discuss today. So shall we get started?
Yes, ma'am, sure.
Okay, yeah. So for all of viewers, we would like to know, basically everyone will be like they wanted to reduce their taxes first point.
Yes.
So like for an individual, how can they reduce their taxes?
Yeah, hi, I'm Ari. We let me introduce myself. We started like 18 years back in Virginia. We was like a small startup company because I started my own company and there was these taxes and they were so overwhelming. That's why I became an IRS enrolled agent. And when I was helping myself, I thought why not help other people. That's why I got started in taxes and accounting field. Yeah, how can I reduce my taxes? That's a broad question. It depends on what kind of situation you're in life. For example, if you're a employee, W-2 employee, the best way is your employer 401k. In year 2020, the limit is $19,500. I think you should max it out. A lot of people, they think that they're not going to retire anytime soon, and one more disadvantage, they think that they cannot take the money out until they retire. But there are more options. Once you change your job, you can set up your own self-directed IRA, and you can control the money. You can invest in real estate, or you can give a loan to your friend. So I would recommend all people who are W-2 employees to invest in 401k. And again, depends on where you stand. For example, if you're a student or you're a self-employed. So I think we can come back to this question once we go through all the different scenarios, and then we can revisit the question and summarize it later on
Oh,
at the
yeah.
end.
Definitely. So today I'll be asking you a lot of many questions on taxes. Basically, a lot of viewers are more interested on this topic especially.
Okay.
So if anyone has any questions, please dial into the number that is scrolling. Okay. Hari Garu,
Yes,
like
ma'am.
recently there are like a couple of changes. I mean, there are new law changes for the tax. So what are some of the new tax law changes?
Yeah, when Donald Trump passed that new law in 2017, Tax Cut and Jobs Act, there were a lot of changes. For example, before there were personal exemptions, he removed the personal exemptions, but he increased standard deduction. And so there are some positives and negatives. Like for example, before the child tax rate was $1,000, Trump made it $2,000 for people who have social security number, but people with ITN, they only get $500 credit. And one more thing, for small businesses, C Corps, he reduced the tax rate from basically 35% to 21%. So there's a lot more incentive to start a business in US and do it as like a C Corp also. And apart from that, daycare is still the same. $3,000 out of $3,000 you get 20% credit. Yep. For basically,
Okay.
it's very simplified. He removed a lot of stuff, but he simplified and he reduced the tax rate also by 2%. approximately
Oh, okay.
2%. Yeah.
Okay, okay. So, I mean, I know that a lot of salary, based on the salary, some people will be getting, amount for the government funding.
Yeah, and
So,
one
do
more
we
thing is
have this?
AMT taxes. Before, AMT taxes was a big killer for a lot of people. With the new tax law, alternate minimum taxes are, I think, till 2027, alternate minimum taxes won't show up.
Oh, okay.
So that's one good thing for some people. Yeah.
So, is it the same way for individual businesses also, like small scale businesses also? Is it the same way that government is going to provide some fund or anything? Tax relief?
You oh, tax relief. You mean for the new tax law?
Mm-hmm. Yeah, with the new tax law.
Yeah, there's a 20% deduction for S corps and LLCs. So if you're making
Oh,
$100,000 and if you qualify, you can deduct 20% deduction. But you have to
oh,
qualify income limitations and all that. And actually, for business, it's a lot better in the new tax law.
oh, okay, cool. Yeah. So, a lot of new business will be coming up in this year, I guess.
Yeah, yeah, it's a good
Yeah,
place to
okay.
start business. Yes, yes.
Okay, yeah, awesome. So, could you please explain, what is like 401k and IRA? Uh, Maybe we can talk further on this 401k and.
Yeah, retirement planning is one aspect which everyone should consider, whether they are a full-time employee or they have their own business, or they can even start when they're students. Uh,
Mhm.
for people who are employed, they can start contributing to their employer 401k, which is I think in 2020 is $19,500 from the employee payroll, and the employer, most of the employers match at least 5%.
Right,
And
right.
yeah, and then there's something called Roth IRA. If people can still do
Yeah,
Roth
I was about to ask that. What is like a Roth IRA and like there is something a backdoor Roth. What is that about?
Yeah, a lot of people, Roth is the advantage of Roth is even though you don't get tax deduction, you can still the money grows tax free.
Oh,
So
okay.
if you're planning to invest in stocks, open a Roth, and then maybe the Roth IRA can invest in the stocks, so that you don't have to worry about the tax for filing every year. And but a lot of people, they are not eligible for Roth if there are income limitations. So in that way, they can just do traditional IRA, and then they can roll out the traditional IRA to Roth. So this is called backdoor
Oh,
Roth. So they cannot
oh,
do
okay.
directly Roth, but they can do backdoor Roth.
Oh, okay. So,
First they contribute to traditional IRA, and then from traditional IRA they roll over to Roth IRA.
okay, okay, got it. Yeah. And also we do have like self-directed IRA. What is that about? And retirement LLC.
Yeah, that's a lot of people are actually doing self-directed IRAs. Recently, I've seen like I've done taxes for recently. Like they're like a company with like 20 shareholders, and all 20 are like self-directed IRAs.
Actually, we have
Yeah.
a caller, live caller,
Oh, okay.
Sanant from Florida.
Okay. Hi,
Hey,
Sanant.
Sanant. Hey, could you hear us?
I'm sorry? Yes, yes, I can hear you. Hello?
Yes.
Hello.
Yes, I can hear you.
Okay. Yeah. Please go ahead.
Hi, Mr. Hari, good evening. How are you doing?
Yeah, I'm doing good, sir. Thank you. Thanks for calling.
Wonderful, wonderful. Okay. So, I'm good, Hari. So, I was in fact was going through a lot of information about you and about your company, and I just saw that you're coming live. So, I thought a couple of things which I can get answers to.
Yeah,
So,
hopefully I can answer
I
right away, or
heard
if I
about
can't, I'll email you maybe. Okay. Please go ahead.
no problem. So I was just hearing the conversation about the 401k. I just have one question. In fact, in terms of the small scale business, so I manage one of the Indian restaurants in Florida. So just wanted to understand the taxes on that. How do we go about it? What are the best ways so that I can save some tax? Having said that, I have certain employees who work full time as well. I just wanted some inputs from how do I go about in terms of tax savings and how do I plan?
Maybe you are aware of SEP IRA also, sir? You are aware of SEP IRA?
Not exactly, Hari. To be very honest, in fact, I have very limited knowledge about the facts. So
Maybe you
I'm just
can
trying to get.
start with some kind of retirement planning for your employees. Maybe you can do SEP IRA. SEP IRA is easy to manage, and maybe you can just contribute whatever you want to contribute to your employees. And then later you can next phase you can plan for the 401k. Maybe that's one option for you. Yeah,
Because
when I
this is
started my
startup,
yeah, please tell me.
yeah, Mr. Hari is just a startup. So while I was into IT as an employee, I'm aware of the taxes and rest of the things. But since it's a small scale restaurant which I've started, I really need to understand how do I go about it. I very well understand what I'm trying to say from the employee point. From the business standpoint, the year I want to understand how could I get taxes.
So you rent your place, or you rent your place, or you own the place for the restaurant?
I own the place.
You own the place. Okay. So you're already taking the depreciation and all that, right?
Absolutely, yes.
And you're generating profits, or on tax point of view, it's a loss right now?
Well, to be very honest with the current situation, we are into negative.
Yeah.
We were making the profits, if I have to talk about the last year, but with the current situation, the things have gone bad. Hope you're aware of that.
Okay.
So right now we are in loss.
Did you apply for the recent COVID programs, PPP program and economic injury disaster loan? Did you apply for those?
We did that, Hari, but there's certain things which I think they require. I mean, I think it may take a little longer time as expected. So that is already in process.
So the August, you already met August date is the last date to apply for the PPP loan, right? You already your application in process right now.
Yes, it's processed.
As I said, you can look about SEP IRA plan for your employees, and you can have most of the restaurant employees, they have children, so they have daycare and stuff. Maybe you can start thinking about setting up a FSA plan for your employees, maybe. And
okay.
If you want to really help them out, maybe make them a shareholder in your company, maybe, so that they feel that they're part of the company and contribute more hours and give more ideas. And maybe you can be a franchise maybe later down the line, right?
Okay, let me understand what you said just now. You mean to say that I need to make my employees as a shareholder of the restaurant?
Yeah, some kind of mutually beneficial agreement, maybe, right? Like I've seen the grocery store here where everyone is like a partner or in the company. So
okay. So by doing this, don't you think I'll get into more losses, sorry?
More losses. It depends on how. Ultimately, the employees have to put their heart and soul in the company to make it successful. So if you give them retirement SEP IRA and the medical, you have a nice medical insurance also for your employees, or
yes,
you're still working?
Everybody's covered under that. Yes.
Yeah, your medical insurance for them, and you set up a SEP IRA account, or if you can afford 401k, you can do 401k account, and maybe make them shareholder of the company, so that they feel they're part of the company and they can contribute long term.
Okay, Hari.
And
I will take this as input. I don't think we can have a longer conversation call, but yes, I will certainly get in touch with you maybe after a couple of days, get some more input.
Sure. And who does your payroll? You do payroll in-house, or you use some online software, or who does your payroll and stuff like that?
We have a vendor that's this one now. So he's taking care of all the things right now.
Oh, okay. Yeah, and maybe you can see how we can reduce your expenses. Maybe. Yeah, that's the.
So, Hari,
Okay.
Thanks for your time and thanks for the input. Thanks for taking the call.
Yeah, thanks for calling. Yeah, thank you.
Yeah, thank you for your call. Yep. It's a nice input, Hari Garu. Yeah, I think they'll be beneficial for him. Yeah.
Hopefully, yeah.
Okay. Coming back to our topic, we were discussing about some self-directed IRA and retirement LLC, right? So maybe can you explain about them, about that as well?
Yeah, recently I can give an example. Recently, a couple of people are coming together. Like they're creating WhatsApp groups and like 20 people. They have money sitting in their 401ks. Each one has like maybe like say $100,000 in their bank in the 401k account. And when they change their jobs, instead of rolling over their previous employer 401k balance into a new company, they can set up their own retirement LLC,
Okay.
self-directed IRA or self-directed 401k. They can set up their own. They don't have to set up in a big Fidelity or big banks. They can set
Oh,
up their
right.
own and roll over that money to their own self-directed IRA.
Okay.
So
Okay.
and but still you cannot withdraw the money because there's a 10% every withdrawal and stuff. And so the rules are same whether it's a big companies managing a 401k or you're managing yourself. The rules are same. You cannot withdraw the money until you retire. But setting up your own self-directed IRA gives you the option to invest more investment options. As I said, in Virginia recently, like 20 people came together and they pooled money like $2 million and they bought a big chunk of land, 30 acres land. So it gives you more options to invest and control your money. But if the money is sitting, the 401k money is sitting in a big Fidelity, you can only do stocks and bonds, and only few options are there.
Right. Yeah.
And this option you get only when you change your job or something like that. So when you change your job and the money is sitting in your 401k, you can think the option of setting up self-directed IRA and
Oh,
retirement.
okay. So bunch of people coming together and investing on the land. That's
Yeah, all 20 people are self-directed IRAs.
oh,
They're all retirement 401k accounts,
oh,
and
okay.
they all contribute. So it's a retirement money, but they have more control to invest where they want. Yeah.
Right. Yeah. That's interesting to know. Yeah.
Yeah,
Okay.
that's catching up actually. A lot of people are doing it now.
Yeah. Yeah. Uh, okay. So I also hear about solar credits that are available for the year 2020. So what do you say about that? What are the solar credits?
Yeah, actually, government is reducing the solar credit. In 2019, it was 30%. I think now it's 26%, and
Oh, okay.
and next year it will be 22%. So if anyone is planning to do solar, it's better to do it this year and maybe next year. And you get like 26. I think it's 26% credit right away. And
Okay.
and you can actually do solar investments also. If you have, for example, if you have $200,000 sitting in your bank, and instead of and there's a temple, you go to a temple, and the temple, you know that they want to do solar, they don't have the money. So what you can do is instead of investing this 200,000 in a bank where you get only 2% interest, you can set up a solar company, and the solar company can invest in the temple, and you get 26% credit, and then you get deduction. So I think 50% money you get right away out of the $100,000 invested. $50,000 you get right away back.
Oh,
So the remaining $50,000, the temple will be paying you monthly bill, right? And then you can give them a temple a discount. If they're paying $1,000 per month utility bill, you can charge them maybe $600. So you're helping the temple, and then you're helping yourself, and you're helping the environment too. It's a solar thing. So that's a lot of people do that solar LLCs. It's not a correct term,
right.
but that's a concept. Yeah.
Yeah. So you mean any employee can do this? Anyone who's
Any
interested in
investor, any passive. You
any
don't have to
investor
be.
can.
It's like a passive. You're a passive investor basically. There are companies who, if you don't know how to do, you can actually do it yourself, but it's too much. If you don't have the solar knowledge, there are companies who help you. I think they charge maybe 5% or something, but they help you set up the whole thing, and they
Oh,
invest in a temple. And you will be getting a monthly check.
oh, okay.
You'll be. I think the rate of return is 10%. I think 10%, or I would say 10% to 15%, depending on how much you collect the bill, and
Nice. I mean, this is also something interesting. A lot of people would be interested to invest.
Yeah,
Basically,
the
everyone will be looking
basic
for
thing is
this.
you get 50% right away. If you're investing 100,000, you get $50,000 money back right away. So
Right.
you're only actually investing $50,000 for like actually $100,000 investment. And the
Okay.
rate of return is pretty good, the rate of return. Yeah.
So these are called like solar credits. Okay, okay. Sounds interesting. Yeah. And we got some of the emails from like a couple of members. Like, what is the best way to handle daycare expenses? Maybe
Okay.
you can suggest them.
Yeah, if you're an employee, full-time employee, I think best way is to enroll in your employer's flexible spending account. I think it's $5,000 per family,
Yes. Right.
and make sure you and both husband and wife have to work to claim that to contribute that. If the spouse is not working, there's no point in doing that. If both are working, enroll in your employer's flexible spending account. Only one of them, not both, cannot do it. Only one can do
Oh, only one of them.
$5,000. Yeah,
Okay.
if both do, again it'll add up as income in your while you do your taxes.
Right.
So
Right.
and then, but if you missed your FSA, you can still make sure you get the W-10 form. If you hire a nanny or someone, make sure you get a W-10 form. Basically, it's the federal tax ID, name and address,
Oh.
and I think it's $3,000 per kid. You get a credit for $3,000. $3,000 into 20%, which is like $600 per kid. So if you have two kids,
Oh.
you get like $600 into two, $1,200 credit. You get child tax credit. But make sure you get that form W-10 signed by the daycare provider and keep it ready for your tax prepare at the year end.
Um, yeah, yeah, yeah. Yeah, a lot of people who are having little kids, I mean, this is also like they're all looking for the like how to save these daycare expenses, how to invest.
Yeah,
Yeah,
unfortunately, people spend $10,000, but the limit is only $3,000. So yeah, the
right,
government
right.
should increase it, but that's all right now. It is only $600 per kid is the maximum credit you can get.
Yeah. So you told us about like little kids, I mean daycare expenses. Now I'm curious to know about education credits and college saving plan or like S29 plan. What is that about?
Let me first talk about 529 plan. If you're planning to do savings for your kids, 529 plan is a good way. Even though you don't get any federal direction, you don't get any federal break in the 529 plan, but the state gives, for example, in Virginia, the limit is $4,000 per contract. So if you have four contracts, you can deduct $16,000 in the state taxes. I think state
Okay.
is 6% taxes. So you save 6% in the state taxes. And the advantage of that 529 plan is the money grows tax free. So
Oh, 529 plan. Okay.
yeah, the money goes tax free. So you never have to pay tax on it as long as you use it for valid expense. And I think it can be transferred. So from one beneficiary to another beneficiary, you can. I think you can transfer it also. You have to check the rules with your tax preparer, but mostly it's pretty flexible. Pretty flexible,
Okay. Okay. Yeah.
And
Yeah.
and the education credits, there are two credits. One is the American Opportunity Credit, and one is the Lifetime Learning Credit. And but there's still income limits on how much income you can claim.
Okay.
American Opportunity Credit is for the first 4 years of your college. Is the first 4 years of your college, and you get 50% credit.
Okay. Who
So
are eligible for that? Any?
uh, any guys who are 18 years or their dependents 18 years and they go to college, 18 to 22 years, generally first 4 years of their college, and
So
then they
even
fall they come.
dependents
Yeah,
for
dependents.
which code?
Yeah.
Okay. Okay. Yeah.
Parents can claim on the taxes for their children, the American
Oh.
Opportunity Credit. Yeah.
Oh. Okay. Okay.
And
Got it.
lifetime learning credit is you can claim for yourself too. Even if you are 50 years old and you went to school to study something, you can claim the lifetime learning credit.
Oh.
It,
Okay. Okay.
it's up to $10,000. $10,000 into 10%. I think it's $1,000 credit you get.
Oh. Okay. Got it. Yep. 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 Sounds interesting. Yeah.
Yeah.
And also if I need to set up some like small business,
Mhm.
so people would be interested to know what are the tax advantages for that. Maybe you can throw some light on that.
Yeah, there are four ways to set up a business in US. One is the sole proprietor, the basic one. I think it's the common thing in anywhere in the world. Like sole proprietor, you start a business, just open a bank account, and you're in business.
Yes.
And there is in US there are three more LLC. You can do LLC, or you can do S corp, or of course the C corp. Big companies like Microsoft, they are C corps. And let's first talk about the sole proprietor. Of course, the sole proprietor is the easiest way to start, but someone can sue you. There's no liability protection. You can take insurance to a certain point, but still sole proprietor. Some people, if you're just starting you just want to see how we are doing, you can just do sole proprietor initially, and once the
Right.
business goes up, you can set up a S corp or LLC or C corp. So
Oh.
there are advantages and disadvantages for each one. In US, the most widely used is the S corp because it saves the Social Security and Medicare taxes on certain income. You have to run a minimum payroll in S corp, but the remaining you don't have to pay Social Security Medicare tax. So a lot of people do S corp. But there is one restriction, is that only US residents can set up S corp. So if a person if a company has a foreign shareholder, you cannot do S corp.
Oh, okay. Only US residents can do that.
Yeah, and if you want to have foreign shareholders, you have two options. You can do LLC or you can do C corp.
Okay. Okay.
Yeah, a lot of people these days have their partners are all over the world. There are a lot of investors. In that way, you can either do an LLC or you can do a C corp.
Right. Right. Right.
And in S corp, everyone is like a shareholder. All shareholders are equal. There's only one class of stock, in S corp.
Okay.
So there's so in certain ways, a partnership or C corp is better sometimes, because you can structure the way you want. In partnership, you can write your own custom partnership agreement. For example, the restaurant guy you called, if he's interested to, maybe for him, partnership would be a better option to structure. Like the employee works for 5 years, he can give him future rate this much, For example, his cook is really good. You can say that he can set up LLC and say if he works for 5 years, he can give him 5% of the company,
Oh, okay. Yeah. I mean, the person who called just before. Okay.
Yeah, maybe. Yeah, if he wants to. But if he has S corp, each one is an equal shareholder, so he cannot mostly control. That's fine tuning,
Yeah. Okay. Okay. Yeah.
And so there are a lot of advantages for setting up small business in US. For example, you can hire your own kids in your business because the standard deduction is $12,000. So up to $12,000, the kids don't have to pay tax on their income. So if you have an LLC, you can but of course you have to maintain the books, their timings, or what kind of work they're doing. You cannot just deduct $12,000 here, but you have to give them sufficient work to them, because in case of audit, you want to make sure they have the time sheets and everything. So you can hire your own kids in your business, so that will save you a lot of. If you have two kids, you can almost deduct $24,000 kind of tax free, but you have to make sure you maintain the books and everything.
Right. Right. Okay.
And IRS also reduced the tax rate as we were talking before. They reduced the tax rate from I think 35% to 21%.
Oh.
So C corps, the tax rate is also less now.
Right.
So
right. Okay.
yeah.
Yeah. Yeah. And yeah, coming to this tax benefits, like
Okay.
can we claim parents as also like as dependents?
You have to. Yeah, if your parents are non-US citizens or non-green card holders, and if they live more than 181 days, you have to remember the 181 days. If they are in the US 181 days with you, you can claim them as dependents.
Oh.
You have to apply for the ITN number. There's a process. You have to apply for the ITN number along with your taxes for them.
Mm-hmm.
And the 181 days, if you 181 days, for example, for most people, for example, in 2020, if the parents stay here for 180 days, so they missed by 1 day, so they can go back and look at 2019 also. If they came in 2019 also, you can count 1/3 days of previous year.
Oh, okay.
And then 1/6 days of the previous years before 2000. So they can count for 2020. They can count 2019 and 2018 also.
Oh, okay.
So all 3 years. So yeah, they have to meet the 181-day rule, right? So they can count all days in 2020, and they can count 1/3 days of 2019 and 1/6 days of 2018. So all 3 years, if they're 181 days, you can apply for the ITN number, and then you can. I think the ITN number is valid for 3-4 years, and then each time they come, they can renew, and then you can claim them as dependents. Yeah.
Okay, so total like 181 days if the parents stay here, like out of like past 3 years and present year and 2 years and present year, then we can claim it dependence.
Yeah, you have to
Okay,
count only 1/3 days of previous year. Only 1/3
one third
days. If
year,
they,
the
yeah.
previous year. Right. Okay, and would like to know for a lot of people the rent they'll be renting their apartments and everything. Like, what are the benefits of owning a real estate?
Yeah, the rental thing is uh, if you're renting your place to, for example, a lot of people these days are doing Airbnb. If you just rent your place for one weekend, you don't have to report that. I think there's a 14-day rule. There's a 14-day rule. Only if you rent your place for more than 14 days, you have to report the rental income, and you can deduct the rental expenses. But if it's less than 14 days, you don't have to show the rental income. So at the same time, you cannot deduct any expenses, rental expenses.
Oh,
So
okay.
that's a small tip. For example, if you have a company C corp, and the C corp rents your place for the weekend, and they pay you $1,000, the C corp is separate entity from you, right? Your company is
Yes.
separate entity from you. So the company
Right.
is renting your basement for a office weekend party,
Mm-hmm.
and the company pays you $1,000. So $1,000 is only for one weekend, so you don't have to report the $1,000 in your income.
Oh,
And if you maintain a documentation, the company can deduct the $1,000 as expense.
the,
That's not a big amount, but small tip,
yeah,
And
right.
Trump diluted the real estate deductions a little bit. For example, the taxes are limited to $10,000 only. The SALT, they call it SALT, state and local income taxes, is limited to $10,000. But you
Okay.
still want to put the whole amount. You still want to put the whole amount because the state is not limited. So Virginia,
Right.
you get the full deduction. So you still want to put the SALT, real estate taxes. You still want to put what are the actual amount.
Oh,
And Trump also reduced the loan amount on what loan amount you reduced to $750,000. So
okay.
only the interest payments are up to $750,000 you can deduct. So if you have $1 million loan, you can only deduct. You have to prorate it to $750,000 only.
Hmm. Okay. So
And
25%.
then yeah, and for rental properties, you have to file a Schedule C. If you have 10 properties, you have to file in the Schedule E. All properties are listed, and you show the rental income and the rental expenses. And the common mistake I've seen people who do their own taxes is that in the rental they don't put the depreciation. You have
Oh,
to make sure you take the depreciation. It's a mandatory. It's not that you can avoid it. Whether you if you don't take it, you lose it. It's mandatory. You must take the depreciation. And mostly once the depreciation is taken into factor, most of the rental properties, it's tax-free income, because generally you don't have profit, because once you take the real estate tax, depreciation and mortgage, mostly the income is offset by the expenses.
right.
So
Like, is it true? Like, if rented less than 14 days, that no need to pay taxes or report it, right? That's what you're saying.
yeah,
Is it true?
yeah, that's true. Yeah. For example, you're
Okay.
renting your place in a Airbnb for a weekend, or yeah, you don't have to report if it's as long as less than 14 days.
Less than 14 days. Okay. So, like, what is the kind exchange in this process? Like,
Yeah, as I said, if you own a rental property, and down the line after 5 years, let's say it's appreciated and you sold it,
mm-hmm.
it's even valid for properties in India. A lot of people they have properties in Hyderabad and they sell it and they make a lot of profit, and they don't want to pay tax. India and US are reciprocal agreement. If they pay tax in India, they don't. They can take the credit here, but still, if they want to do the like and exchange, if they buy a similar rental property, they can defer the tax. They
Oh,
don't have to pay.
so
Yeah.
like if a person has properties in India and if he can pay the taxes there, that means is this process It's called 1031 exchange. Is that what you're saying?
No. If you sell a property and you made, like, so for example, you made $1 million profit.
Right, right.
Generally, you have to pay tax on it. But within 180 days, if you buy another rental property
Oh,
and invest all the money into another new property, you don't have to pay tax until you sell the second property.
oh, got it, got it.
So
Yeah,
like
yeah.
kind exchange. Yeah. So you're deferring the
Oh,
taxes.
different the taxes. Okay.
Yeah. Ultimately, when you sell the second property, of course, you have to pay the taxes. But
Pay the taxes. Okay, okay. Like, what if I find any mistake in my taxes? Like, after filing. So how do we handle that?
yeah, if you missed your something in your taxes, you have 3 years time to file your amendment. And
Oh,
yeah, make sure within 3 years you can file the amendment. And IRS is very strict about that. Even if you miss by one day, you don't get the refund. One time we
okay.
filed the tax, one time we filed amendment and the client was late by one day. He got a nice letter from IRS saying that no, your 3 years rule, you missed by one day, so we can't process your refund.
Oh God. Okay.
Then make sure you remember the 3-year rule before you want to make any changes to your taxes. Yes.
Right, right. Yeah. Yeah, it was like a lot of information on taxes today. Okay. Like, why don't we talk about, like, why don't you tell us about stocks and investments, or like tips related to the stocks?
Actually, when I was advertising this show yesterday, one of the guy asked a question. He said he made a lot of money in the stocks. How can he defer the taxes? Actually, Trump brought that qualified. It's called QOF, Qualified Opportunity Fund. You keep hearing that opportunity zones, right? In the
Uh-huh.
news.
Yeah.
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 Though, if you invest in those, a lot of people set up a company and then that company invests in that QOF funds. If you
Mm-hmm.
invest that, you can defer the taxes. Same like an
Oh,
exchange. It's same like an exchange. The same concept.
okay.
So if you invest in that opportunity zones in the qualified QOF, Qualified Opportunity Fund, there's one way to defer your taxes. And so you should look into that aspect, yeah, to defer
Oh,
your taxes.
okay. Okay. Like, sell shares in stock market, and like, so for example, if we sell them in within 1 year, and we must pay almost like 30 to 38% of tax. Like, so is there a way to save some taxes by reinvesting, or like, is there any other way in order to save the taxes?
Yeah, there's in stocks there's short term and long term. So you have to make sure you held them long term to pay less taxes, because long term
Oh,
taxes are capped at 15%. But short term, the taxes are treated like ordinary income, and the tax rate is high. But unfortunately, if you made short term profit, as I said, the qualified opportunity fund is one way to defer your taxes right now.
oh, okay, okay, yeah, yeah. Like, how about this cryptocurrency role now? Like, maybe what is your experience, and maybe you can tell us, share your experiences on this cryptocurrency.
Yeah, I've seen when you're doing taxes, these guys come with cryptocurrency pages. They are like thousands of pages, there are thousands of transactions.
Okay.
Actually, yeah, it's same like stocks. You need to get a gain loss report. These days, if you pay a little amount, they give a nice gain loss report, how much was made and all that. And I've seen one guy in New York taking that like an exchange for cryptocurrency also. You have to check with your tax preparer to make sure if you made profit in cryptocurrency and invest in another cryptocurrency, is the like and exchange works or not. But I've seen some,
Okay.
yes, I've seen some advisors using it, cryptocurrency is treating as a like and exchange, and the IRS rules keeps changing. You want to make sure that's true or not. You have to double check, do research, and make sure that's in case of audit, you can justify the like and exchange for cryptocurrency gains.
Right, right, right. Yeah, yeah.
And of course, if there is a loss in cryptocurrency, unfortunately, you can only take $3,000 per year.
Oh, if
Yeah.
there is a loss, only $3,000 per year. That's
Yeah,
it.
that's yeah. If you lose like $1 million, it's only $3,000 per year, unless you have future gains and your gains to offset that loss.
Oh, okay. Then a lot of risk is there, I guess. So, have you
But
ever?
yeah, but if you invest in a small business stock, you don't have the $3,000 limit doesn't apply. You have to look it up. But if you invest in a small business stock, mostly it will be treated like ordinary loss. I can deduct the whole thing here. So there are some advantages in investing in a small business stock. For example, the restaurant guy, hopefully, if it's a small business and if he invests in his restaurant and he loses money, he can direct it right away.
Oh, okay, okay, yeah. In that way, it is like useful, I guess. Yeah.
Yeah,
Okay.
small business investments has some advantages. Yeah, you have to, if you're investing in a small business, make sure you see your advantages.
Right, right, right. Yeah. Okay. Would also like to know, like, what are the reporting requirements, like, for the foreign assets?
There are two things. One thing is called FBAR, which I think most of people are aware of it now. FBAR. If you have more than $10,000 at any point in a foreign account, you have to report that. In a FBAR form.
Okay.
If you Google up FBAR online, there is a Treasury website where you just go and fill it up. Actually, it's a very simple form. I would recommend clients to prepare an Excel sheet with 5 columns: the name of the account, the name of the bank, account number, address, and how much balance they had. Once
Right.
they have the Excel sheet ready, and of course, if they have income, if they made an income on that, they have to report that income. They have to pay tax on that income to U.S. government.
Oh, okay, okay. So
So
is it only for the liquid cash or also for the assets as well?
no, mostly financial assets. Yeah,
Oh, financial
mostly,
assets.
and then of course you're a stockholder in a company, or that also you have to do anything financial instruments. Yeah.
Okay, okay. So
It's a
everything should
simple
be.
form. For 90% of people, you don't need any advisor to file the FBAR form. Of course, if you come to me and pay $300, I'll file it, but you don't need me to file FBAR. It's a simple form. Just prepare an Excel sheet and go to Treasury website and fill it up. And if you're more than $100,000, there is another form which you have to file. It's called, I think, 8938 form,
Oh,
foreign asset form, assets form. It's called 8938. And that form goes along with the tax filing.
okay.
FBAR is separate. FBAR is separate. It doesn't go with the tax filing. It's a separate form you have to file on the Treasury website.
Right,
But
right.
that 8938 form is same like FBAR, but it's a little bit the same information basically, but in 8938 form. So you have to
Oh,
make sure if it's more than $100,000 in a foreign account, you have to file that form 8938 and pay taxes.
8938.
Yeah, and pay taxes on the interest income or dividends you make. And if you pay taxes in India, make sure you claim foreign tax credit.
Okay, okay, yeah. So, మీరు చూస్తున్నారు కదండి మీకు అలాంటి క్వశ్చన్స్ ఏమైనా ఉన్నా ప్లీజ్ టు గివ్ అస్ ఎ కాల్ టు గెట్ క్లారిఫికేషన్స్ అండ్ ఆల్సో వింటున్నారు కదా అసెట్స్ అవన్నీ ఉంటే ఎట్లా లైక్ వాట్ ఆర్ ద రిపోర్టింగ్ రిక్వైర్మెంట్స్ ఫర్ ద ఫారెన్ అసెట్స్ అండ్ ఆల్ సో లైక్ లాట్ ఫర్ ఇంట్రెస్టింగ్ టాపిక్స్ ఆర్ కమింగ్ అప్ నౌ స్టే ట్యూన్ okay this is for students basically my question is like uh, how do like students on F1 visa file taxes in USA? That is a big question. First question, whoever comes to here for the first time.
Yeah, most of students on F1 visa, the common mistake is they have to file a 1040 NR form,
Oh,
and India and US has a tax treaty for students. They can claim standard deduction, which is $12,000 right now. I think $12,100 something. They can
oh,
claim the standard deduction, and one more common mistake is when students work outside. They have to make sure the Social Security Medicare taxes are not withheld by mistake, because once the Social Security and Medicare taxes are paid by the employer by mistake, you can get it back, but it's a tough process to you have to supply. You have to fill all bunch of documentation, submit your passport, I-94 copy, and all the documentation. So make sure your employer is not withholding Social Security and Medicare taxes in error. Because
right.
I think most students, they don't have to pay Social Security Medicare taxes unless they get their H1 visa. So
Okay.
first I think couple of years, as long as they're on F1 visa, they can file 1040 NR form.
1040 NR form. Okay. Yeah. Yeah. Okay. So are there some of the changes due to COVID with the situations?
Yeah, actually, as you see, government was giving the $1,200 stimulus checks to a lot of people who qualify. But unfortunately, if one of the spouse has ITIN number instead of social, if the spouse has ITIN number, she is not getting the $1,200 stimulus check.
Oh, okay.
And a lot of people, they don't apply for social security number, thinking that this my wife is not working, I don't need the social security number. But the moment you're on H4, and make sure you apply for the EAD card and get the social security number, because they'll come back and bite you later on. As soon as
Right.
you're as soon as you're eligible for social security number, make sure you apply for it.
Oh,
Yeah.
okay. Okay. Got it.
I have seen, recently one of my client, he forgot to apply social for his ITN number for his wife, and he was saying, "Oh, I did not get my COVID check," and of course he won't get. Now he's trying to go and apply for a social security number, and it's been almost, because once the paper filing gets delayed a lot, so we make sure everything is done electronic filing on the first time, and it goes smooth.
Oh, okay. Okay. Yeah.
And one more thing about the new COVID thing is that if you have money in 401k, you can take it out without paying the 10% penalty. If you're
Oh,
affected
okay.
by COVID, yeah. If you're affected by COVID, and if the money is sitting in an IRA account or 401k account, you can withdraw the money without paying the 10% penalty.
Okay. Okay. Yep. That makes life easy for all the people
Yeah,
who
short
have.
term people. Yeah, yeah.
Yes.
If you lose a job and you are that's a good option to take some of the money from 401ks.
Right. Right. Okay. Okay. Like here is another question from one of the email. Like,
Okay.
if my parents gift me money, what are the tax consequences? So that is a question.
It depends whether your parents are live in US, or they're US residents, or they are non-citizens. They're foreign. You get a gift from foreign residents. If it's a
Oh,
foreign
okay.
residence, if you get a gift from foreign residents up to $100,000, you don't even have to report it. I get this question a lot. They say, my parents are sending me $100,000. Should I report, or what should I do? As long as it's $100,000, you don't even have to report it. So
Oh,
make sure you get the gift. Maybe you can get a December 100,000 and next year 100,000, so you don't have to report it. Make sure you structure that way to make it simpler for the reporting purpose.
okay. So
And
less than or equal to $100,000 should be fine.
yeah, if your parents wire you $100,000 as a gift, you don't have to report it. Yeah.
Okay.
And if it's a US people, it's the person giving the gift up to $15,000. He doesn't have to report it.
Oh, okay. Okay. Like, how
Of course,
about
it's
like foreign gifts?
foreign gifts, as I said, is $100,000. Yeah, $100,000.
Okay.
And US,
The,
actually, the person giving the gift has to file a gift tax return. If it's more than $15,000, he has to file a gift tax return.
oh, okay.
You can give more; it's not taxable, but you have to file that gift tax return.
Tax return. Okay.
For example, if you gift your house to your daughter, you have to file a gift tax return showing that you gifted the house to her daughter. It's not taxable, but it's a reporting requirement.
Okay. 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 Yep. Yeah. This makes sense. Got it. Yeah. How about like what is like foreign income exclusion? What is that about?
Yeah, a lot of people they work in the US for 10 years and they go back. They're green card holders or US citizens, and they go back to Bangalore, or they go back to Ireland. One of my clients went to Ireland. He settled in Ireland. So they have to still file US tax return, but they can exclude up to $100,000 from their taxes. They have to file that form 2555 form, and they can
Oh,
exclude up to $100,000. They don't have to pay any tax, but they have to just file it and exclude that foreign income.
oh, okay. Just file the tax and exclude the foreign income. Okay, okay,
Yeah.
yeah, yeah. And and what are the other health saving accounts that we have in general?
Yeah, HSA, you can either do, your employer can do it for you, or you can do on your own. If you're eligible, if you have highly deductible medical plan, if you're eligible, you can do HSA. I think a lot of people miss this tip, but if you're eligible, you must do it, because it's a savings account which you can use for when you have medical expenses. The money grows tax free, and then and you can use for medical expense. And I think the limit is $7,100. You can deduct up to $7,100 in your taxes.
Oh, okay. So what are the different other plans for health savings?
HSA is the main thing. Of course, your employed medical plan. better to take through your employer, because your employer can, for him, it's before taxes, he can pay for a medical plan, and employer gets the, if you're self-employed, if you're self-employed, and if you pay for your medical insurance, you can deduct on your taxes.
Oh,
But
okay.
and most better to take through employer plan, because employer can structure that way so that he gets, means he gets the tax deduction. Is
Oh, okay. Employer can get the tax reduction.
Yeah, as a medical expense. Yeah, employee expense.
Oh, okay. Okay. Yeah, yeah. And coming, we are almost ending our show. I do have like couple more questions before we leave, and then we can wind it up. Okay. Like, what is like estate planning? How do you say about that?
Yeah, estate is when a person dies. When a person dies, estate is automatically created by the government, U.S. government.
Okay.
There is a federal tax ID, and all these assets go to court, and they distribute assets among the kids, and all the, they check if there's a will or anything, and so a lot of people should start thinking about living trust.
Living trust. Okay. Okay. Yeah.
Yeah, living trust is basically you plan all your assets before you die. Estate is on after you die. Estate is automatically created.
Right. Right. Okay.
But if you just have small, not many properties, I think you can just write a will, I think. But if you have 20 properties and your assets all over the world and your situation is complex, better to start thinking about a living trust.
Okay.
Uh, if you is actually you can buy a software, just do it yourself. Just get your feet wet, and then
Oh.
once you get an idea of it, then you can go back to a lawyer and ask him to see if might ask him to modify. Because if you go to a
Oh.
lawyer directly without any knowledge, he may charge you $300 per hour, and then you may spend a lot of money for something which you don't have to.
So you're giving an advice to just have a look at the software once and get familiar and then go to the lawyer.
Yeah, actually, see if you can see.
Okay. Uh-huh. Yeah. Living trust. Yeah.
Yeah, it's just a
Okay.
software. You go to Office Depot, it's $10. You get the software, and just start playing around. Just get your feet wet, improve your
Okay.
knowledge, and then do your groundwork, do all the paperwork, and then go to maybe take advice from a lawyer, have him second look and see what kind of living trust and what are the options you have. So
Yeah.
actually, the software says the advantage of living trust is ensure immediate transfer of your assets to your beneficiaries and have full control of your property during your lifetime. Bypass the court system, avoid unnecessary legal fees, and protect your privacy. Yeah.
Oh.
So this is how to transfer your assets to your kids.
Okay.
Uh, in a easiest way. So you can start
So
thinking about living.
living trust versus will. Will is a thing that they get after uh, death, I guess, right? And living taxes. I mean, living trust is something that we can
You
write.
can start planning when you're still alive. You can plan out your assets. Yeah.
Okay. Okay.
More.
Yeah.
Yeah. Of course, there's a will. You need want to prepare a will also, right? Will also is
Right. Right.
one.
Yeah. Yeah. Okay. Okay. And last but not the least question, of course, we do have a lot many questions. We can do it in other session. Uh, one quick question: a lot of people will be confused about how do people will know if they have to they have to file taxes jointly or like separately.
Yeah, that's a common question I keep asked a lot. 90% of the time, 99% of the time, it's better to file married file jointly only.
Yeah.
Uh, I try a lot of times to see if it really helps, but actually married filing separately is more disadvantage than married filing jointly. But there's certain situations you want to think about filing married filing separately. For example, if the spouse works in Texas and husband is in Virginia,
Mhm.
and so in that case, you want to married filing separately to so the spouse doesn't have to file Virginia taxes. See if keeps her, because of state taxes. Sometimes you can do married filing separately to just keep it easier.
Oh, right.
And one more thing, theoretically says that if you have a lot of medical expenses, or if one spouse has a lot of medical expenses, you
Mhm.
can see if married filing separately option helps you out or not.
Okay. Okay. Yeah.
Yeah,
Yeah.
there are some penalties for filing married filing separately. You don't get child and dependent care credit. You cannot take if you file married filing separately. So there are some penalties also involved. But overall, of course, you want to. For example, I've seen a wife who says, "Why are you?" I ask her, "Why you file separately?" He says, "My husband is lazy. He files taxes in October 15th, the last date, but I want to get mine done fast."
Right.
So in
Right.
that
Right.
case, also
Mhm.
it depends on your lifestyle. Maybe one wants to file faster, and one
Yeah. It
wants.
all depends upon individual
Yeah,
lifestyle. True. Well
yeah.
said. Yeah.
So in that case, also you can do married filing separately. Yeah.
Oh, yeah. Right. Right. Yeah. Yeah. All right, Hari Garu, like a lot of information that we came to know about the taxes and a lot of the information. And I also see your profile like omsai.com LLC that you do project proposals, bidding, joint ventures, like software consulting, training, development, wow, web design development. So maybe we need to talk a lot more about your profile and what do you do in your company next time.
Sure, definitely. Yeah.
Okay, yeah.
Yeah, yeah. Thank you, ma'am. Thank you.
Yeah, thank you so much for coming to our show. And చూసారు కదండి I think you all got lot of information and stay tuned for next show. Thank you all. Have a great weekend.
Yeah. Thank you.